A lecture covering the highlights for Chapter 16 Managerial Control. And following the lecture, there will be an assignment for you to complete by this coming Sunday. So let's kind of recap what we talked about this week as pertains to managerial control. They define control in terms of any process that directs the activities of individuals toward the achievement of organizational goals. And during that description of controls, they talked about a few key ones. They talked about bureaucratic control and market control, as well as clan control. Now, one of the key things in terms of control is the control cycle. Now, the control cycle consists of four key things. If you remember during the lecture, actually I added like a 3A. The four key ones are setting performance standards, 2, measuring performance, 3, then comparing that performance against the standards and determining any deviations. And then remember during the class I said there should be like a 3A. And the 3A is so what? Meaning I want to compare the deviations, the performance to the standards, but then I want to look at the deviations and say, is it significant? If it is, then I'll do something. If not, then say so what and kind of move on. And then step 4 is actually take action to correct problems and reinforce successes. We also talked about the different types of approaches to bureaucratic control. We talked about feed-forward control, the control process used before operations begin, including things like policies and procedures and rules designed to ensure that planned activities are carried out properly. We also talked about concurrent control. That's where the control process is used while plans are being carried out, including directing, monitoring, fine-tuning activities as they're actually being performed. We also talked about the last bureaucratic approach, which is feedback control. So here we talk about control that focuses on the use of information about previous results to correct deviations from the acceptable standard. We also talked about the importance of Six Sigma. And at Six Sigma level, a process of producing fewer than 3.4 defects per million. Now, the impact on that is significant. Six Sigma companies have not only close to zero product or service defects, but also substantially lower production costs and cycle times, and also have much higher levels of customer satisfaction. We also talked about the use of management audits in the control process. We talked about external audits, an evaluation conducted by an organization such as a CPA on a company, or internal audits that a company might do on itself. Now those can act as very good control tools. We also talked about how it's important to set budgets, and budgets is another example of a setting control. And we talked about different kinds of budgets. We talked about sales budgets and production budgets and costs and cash and capital, and also the overall master budgets and their role in the control process. We talked about activity-based costing. Activity-based costing, a method of cost accounting designed to identify streams of activity and then to allocate costs across particular business processes according to the amount of time employees devote to particular activities. So giving the costs where they actually belong versus just spreading all costs across everything. We also talked about how you can use financial statements in the process to provide controls for a company. So we talked about the importance of a balance sheet, which is like a snapshot picture of how a company is financially at any point in time, and how in looking at the income statement along with the income statement, the profit and loss statement, along with cash flows, which are very similar ideas but different in one key way, and that profit and loss will take into account my sales, my revenue, as well as my expenses, and then they also will factor in any type of accruals you have for the month, and then coming out with what a profit or loss is going to be, as well as a cash flow statement, which is very, very important, especially for a small business. It's like a checkbook. At any point in time, it's going to let you know how much money you have in the bank. And that's what many small business folks actually manage too. We also talked about the importance of financial ratios, things like the current ratio and debt equity ratio and those type of ratios. And the important point there is that these can give you good insight into how your company's doing, but the important part is that it doesn't mean a whole lot unless you have some type of perspective. You know, whether it's a series of ratios you look at over time, or maybe a industry ratio to compare it to kind of give you some kind of context on whether you're doing well or not doing well. And then we talked the idea about how you want to measure folks on their performance, but you don't want to have it only in one area. You want to use multiple approaches. And the idea we talked about here was the balanced scorecard. And that's a control system that combines 4 sets of performance measures: financial, customer satisfaction, business processes, and learning and growth. Now that's a quick recap of what we talked about during this past week. So now what I want to do is give you your assignment. The assignment is, at the end of chapter 16, there's a case called Grizzly Bear Lodge. I want you to answer those 3 questions. And again, the total time to do this assignment plus listen to this lecture should be about the 50 minutes that we normally would have been in class. I will put up a Dropbox for you to put that into, and it is going to be due by this Sunday at 11:55 p.m. If you have any questions, you can text me, because I will be available by text, or you can send me an email through Angel, and I will respond to those sometime on Saturday. Good luck.